Let's see the quarterly results for Millennium Online Solutions and understand what these results are showing. So if you look at this quarter, sales came in at 0.51 crore compared to 0.40 crore last quarter. That is an improvement of about 28% quarter on quarter. And if we see year on year, sales more than doubled, up 183% plus June 2024. So top line growth is strong, showing some recovery after multiple weak quarters. And expenses stood at 0.52 crore, almost equal to sales, which is why the company is still struggling to turn profitable. Material costs were 55% of sales, and employee costs were around 6%, both under control compared to last year, but still too high versus revenue size. Operating loss narrowed to just 0.01 crore compared to 0.11 crore loss last quarter. Operating margin is now at 1.96%, which is much better than last quarter's minus 27%. So company is moving closer to break even. And net profit loss was 0.01 crore compared to 0.08 crore loss in March 2025 and 0.09 crore loss in June 2024. Losses are consistently coming down, which is a positive sign. So after seeing these numbers, overall sales are bouncing back strongly after last year's weak performance. And losses are narrowing every quarter, showing that cost control measures are working. But the company still needs a few more good quarters of growth to become consistently profitable. In the short-term view, this looks like a turnaround story. Sales are picking up, losses shrinking. But the scale of business is very small, only 0.51 crore sales in a quarter. So volatility will remain high. For the long-term view, investors need to watch whether the company can scale up revenue beyond 1 to 2 crore per quarter. If that happens, operating leverage will kick in and margins can improve. Till then, this remains a high-risk micro-cap bet. But there are some risks involved in this company. As it is a very small company, any drop in sales directly leads to losses. And it has very limited product range, which dependent on computer hardware trading. And company has negative return ratios. If you see ROCE, which is minus 4.78% and ROE is minus 5.54%, which shows weak financial efficiency. So what do you think? This company can actually turn profitable in the coming quarters, or will it remain stuck at the micro level? Let me know your comments.